It's been a fairly pleasant morning for the markets, you'll have to say. Started off with a 0.5% uptick, and for the first 10 minutes has maintained it, 0.4 at this point in time. As you can see on the Nifty and the Sensex as well, up almost 100. The Bank Nifty is supportive today. It's about 0.5% higher, and led by Yes Bank. Most of the private banks are in ship shape at this point in time. We'll have to see whether the gains can be maintained. But to answer that question, of course, we have our market master for the day, Jitendra Sriram, Managing Director and Head of Research at HSBC India. Good morning, Jitendra. Thank you very much for joining us. Well, the first question really is the downward correction over? We saw a fairly rapid decline from 8,800 to 8,300, almost non-stop, and then that smart reversal. Do you think we have a little more to shake off as we get into the earnings season?
Well, I would say that that correction was probably something more India-specific, because during that phase, if I look at other indices, either in the region or in the Western world, they were quite resilient at that point of time. So my gut feel is that it probably had to do with the largest, the block trade in Sun Pharma that we had seen that almost about 20,000 odd crores. So people were probably creating room for it and various other things. So I guess part of it was led by that, and then once that overhang was behind us, then I guess the markets showed some uptick. But having said that, I would say there are two things that are going to be quite critical now. One is this earnings season, and up till now it has been reasonable, barring some hiccups on the IT side where we have had a little bit of stumbles. But I would say that the IMD forecast yesterday is going to be also equally critical, because one bad monsoon probably we can handle, but also do be aware that the IMD has spoken of a 1/3 probability of it being a deficient year this time around. So as your updates start coming through, maybe month and a half down the line, and if there is two back-to-back really poor monsoons, then I guess it could be a little tough in terms of rural offtake, various other things, even in terms of the government response as such.
Jitendra, hi, morning. But generally the first observation that comes in from the Met is not the most accurate one. I mean, we get more accurate observations in June and July. So should one really be concerned about the monsoon forecast at this early stage?
Well, maybe not. I mean, I take your point completely that it is, the accuracy of the forecast obviously improves as we get along. But I would say that is something one has to keep at the back of their mind. In a sense, it's a red flag. And it is not that the IMD is solo in highlighting this. The Aussie Met Office, the US Met Office, all have highlighted that there are situations which are probably indicating a repeat of an El Nino kind of a phenomena in the weather situation. So I would say it is something that one needs to be aware of.
Okay. Now let me come to the specific results. We saw the tech results a little under the weather, but since then some of these stocks have fallen. What's your view of the sector in general and your favorite picks there?
Well, overall, on the defensive spectrum, I must confess that we are not as enthused by it, mainly because of the stock performance that these sectors have shown. Last year, after the initial euphoria post-electoral verdict and so on, we have actually seen that the defensive spectrum of the market, which includes healthcare and IT, do exceedingly well. Part of it has also got to be the tailwind from the currency strength that the US dollar saw. And I must add here that HSBC has globally quite a counter consensus view that we believe that with the first quarter of this financial year, that is June quarter, we believe that the dollar strength will probably come to a close. So we do expect the euro dollar to start rebounding from here, which makes us a little bit more cautious on those. In fact, from a strategy perspective on India, we are actually underweight tech and pharmaceuticals at this point of time, though we do have individual stocks which we think there is some juice to extract. For example, in IT, we are still quite constructive about Infosys, whereas in the pharmaceutical sector, we still like names like Sun Pharma. There, given that there is some juice to be extracted out of the Ranbaxy acquisition and so on, or the merger, sorry.
Okay. I was, in fact, going through your preferred stock list, and over there you have NTPC, which is in your Asia Super 10 and GEM Super 15 portfolio stock. Just tell us about what the trigger over there could be. And in general, the government has done quite a bit for the power sectors in the last 2 or 3 months. What are your key takeaways of how much it could improve the situation so far?
Sure. See, NTPC is something that, we are actually seeing the triggers fall in place from multiple directions on an ROE expansion here on. So the first part has to do with the fact that they issued these bonus debentures to alter their capital structure to make it more productive in terms of shareholder return on equity. So that is an exercise that got done by March end. Secondly, we are seeing some amount of under construction projects move into operational stage, which should be a natural fillip for ROE as they become income earning rather than being dud assets on the balance sheet. The third thing would be that in terms of the the renewables foray, where they're talking of putting up a lot of solar stations and other installations, we believe that could be the other added trigger, because the leverage rates allowed there are better than what is allowed on thermal plants in terms of the ROE profile. So putting all of this together, we believe that the story is definitely capable of delivering a 200-250 basis point improvement in ROE over the next 2 to 3 years, which makes us quite constructive. And the valuations are not very rich. Given the market move of almost about 40-45% last year, the stock has been a relative laggard, which makes us quite positive on the name.
Okay. Well, among the financials, your preferred stock is only HDFC Bank. You aren't impressed by the Yes Bank numbers. You don't think ICICI Bank has fallen enough. None of the other private guys?
Well, private bank as a overall sector, we are overweight. I must add that, in our top picks, apart from HDFC Bank, we also have IDFC, which is transforming itself into a bank sometime by October. So that is another name that we do like. And even on other names that you mentioned, Yes, etc., we are overweight on these names. See, in terms of our preferred picks, it is obviously the ones where we see, risk-adjusted returns being the maximum. I would say that on the private bank as a whole universe, there is going to be a little bit of headwind near term, which is going to be that this deadline from RBI in terms of restructuring of assets and etc. lapses by March. And as a result, you might see an uptick in restructuring costs for a lot of these banks coming through into the earnings. So I would be a little, selective on that segment at this point, because there will be a lot of people who have grown quite aggressively in the recent past who could have some uptick in terms of restructured losses.
Okay. Another one of your preferred stocks is Maruti. That one comes out with its numbers on Monday, and there is expectations that it will be a stable quarter. But the only concern is that the entire sector has not seen too much of a revival on ground in terms of sales, etc. Would that not concern you, or do you think that the fact that Maruti has been outperforming sector is reason enough to continue buying that stock?
Well, I think the two more stronger things which are kicking in is that cost of ownership is clearly going down for consumers because of the weaker fuel prices in relative terms, plus the fact that, at least from April onwards, the banks have started the policy transmission on the RBI rate cuts, dual rate cuts that were announced. So to that extent, cost of ownership, even in terms of the EMIs, etc., start drifting down. So both of these things from an urban demand is definitely positive. Rural has been okay so far. Obviously, there is a risk that I cannot deny, which is the monsoon successive potential failure prospect. But I would say, at least two of the engines seem to be firing, which is the urban demand. The second is there's been a slow uptick even in terms of the export output. So these two things are doing okay for it.
Okay, speaking of Maruti, one is reminded of the way the auto ancillary companies have performed. We've seen minor trimming in Bharat Forge and the likes of Motherson Sumi. In your mid-cap list, I only saw Titan. Isn't the auto ancillary a great place to be in? Any preferred picks there?
See, we do come out with our mid-cap picks, and we do have some names like, Voltas there, names like United Phosphorus and all there. So, there are certain names that we do like. Hathway was another name that we like. But coming to your specific question on auto ancillary space, I would say that there are two parts here. One is that would they be the best in class? Probably people who are more locally exposed given the CV cycle recovery and who are probably having benefiting from it will probably do better, because we recently had some data come out from the US trucking industry which showed some weakness. There was also this issue off late about the euro strength, which was impacting some of the European the euro weakness, which was impacting this translation related gains coming through for companies. So people who have substantial exports could see some headwinds in the near term on the results as such.
Okay. For the next, say, 3 to 6 months, Jitendra, apart from earnings that we discussed, where there's no guarantee when the recovery could come through, what could be the next most important positive trigger that the market should look forward to?
Well, I would say that, in the first half of the parliamentary session itself, we have had at least about half a dozen bills getting passed. We are tending to get too much swayed by one bill, which obviously has attained a lot of controversial hues, the land reform bill that I'm talking about, and which obviously there is polarized views in the political segment there. But even setting it apart, supposing that does continue to be contested quite hotly between various parties there, I would still say that, other things, if they continue to progress, if the parliament remains as productive as it has been in the first phase, and if you see some movement happening on GST, etc., I would still view that as quite positive for the market. So one is the reform related thing. The second is obviously the capex recovery that you need to see in the market. And at least there are some encouraging signs. Activity levels on the ground seem to be picking up, going by the M&HCV growth that you posted in FY15. Second part is in terms of, power demand, it has spurted by almost about 8% for FY15. So these are very basic indicators that are at least showing some traction coming into the economy. And if, all these coal blocks, spectrum block, people who have won these things start, investing to milk what they have won, hopefully that should lead to some kind of capex coming through apart from government-sponsored capex on rail and roads.
Okay. Well, yesterday actually Minister Piyush Goyal was bemoaning that the demand for power is a bit subdued. Nevertheless, I wanted to look at another point in your recent report. You say that the year-end, the calendar 2015 target for the Sensex is 30,100. So basically, we will at best touch the highs we have already touched. We don't breach the highs for the year. Is that your view?
Sure, because it is a relative call vis-a-vis rest of Asia, and within Asia there are a couple of markets that we are overweight in, including China, and we believe that you've already done 5 months of the year, so expecting a 20-25% in a half year gone by kind of a scenario is a difficult task. So that is where we are at this point of time. So India is clearly something that is looking relatively better given the turnaround, the improvement in ROE and stuff that makes us constructive on it.
All right, Jitendra, thank you very much for joining us with that many-sided conversation. Pleasure speaking with you as always.